On a Saturday morning in February 2022, the United States and a handful of allies did something that required zero soldiers and zero missiles. They froze $300 billion belonging to another country's central bank. Not stole it, not spent it, switched it off like a breaker in a basement. That kind of power exists because of one number. Recently, that number sat at 56.77%. That's the share of the entire world's foreign currency reserves parked in US dollars. A generation ago, it was over 70%. Hang on to that number because by the end of this video, you'll know exactly what happens to your rent, your credit card rate, and your grocery bill the day that number keeps sliding. And you'll know which country people keep pointing to as the one that finally ends this run and why it probably can't. Before we go further, credit where it's due, this is very easy to make sound like a cheat code America invented. It isn't. In July 1944, delegates from 44 countries met at a hotel in Bretton Woods, New Hampshire, because the rest of the industrial world had just been flattened by two world wars. The US walked out of World War II holding roughly 2/3 of the planet's gold. Every other currency in that room got pegged to the dollar. The dollar got pegged to gold. Nobody forced that arrangement. It was the last currency standing that anyone trusted. Even after Nixon severed the gold link in 1971, the dollar kept winning. Not by decree, but by repeated choice. Deep and liquid bond markets, courts that actually enforce contracts, and 80 plus years of habit. So this isn't a the dollar's about to collapse buy gold video. It's also not a nothing can ever touch us video because that's just as lazy. This is about what reserve currency status actually buys America, who's really gunning for the job, and what happens to your actual wallet if that grip slips. Quick definition, because the term gets thrown around like everyone already understands it. A reserve currency is just the money a foreign central bank chooses to hold as its rainy day fund instead of its own currency. If you're the central bank of Vietnam or Nigeria and you need a stash everyone else will accept without blinking, you don't hold dong or naira, you hold dollars. That single habit, repeated by roughly 150 countries, is the entire engine behind everything we're about to talk about. Reserve currency status isn't a trophy. It's closer to three superpowers stacked on top of each other. Superpower 1, cheap borrowing. Because central banks and investors everywhere need dollars, they buy US Treasury bonds by the truckload, which pushes the interest rate Washington pays down. Economists estimate that discount is worth somewhere between $80 and $200 billion a year in reduced interest costs. That's real money, even against a national debt that just crossed $38.4 trillion, with interest payments alone topping $1 trillion a year for the first time in 2025. Superpower 2, sanctions leverage. That $300 billion freeze from the hook only works because the target's money was sitting in dollars, running through systems Washington can reach. Try that against a country holding its reserves in something you don't control, and the phone call doesn't work anymore. Superpower 3, import advantage. Oil, electronics, basically anything priced in dollars. Americans buy without converting currency or eating a currency risk premium. It's a quiet tax break baked into everyday prices. There's a cost to this too. Economists call it the Triffin dilemma, because the same demand that keeps the dollar strong also makes American exports pricier abroad. Nothing here is a free lunch. It's a trade, and so far, America has been on the winning side of that trade for 80 plus years. Here's the part that doesn't get headlines. This dollar share has been sliding for 2 decades, quietly, like a tide going out a few inches a year. Over 70% in the early 2000s, 56.77% by the fourth quarter of 2025. Nobody stormed the beach, it just receded. And here's the twist nobody expects. Most of that slide didn't go to one big rival. It scattered into a dozen smaller currencies: Australian dollars, Canadian dollars, South Korean won. A little bit everywhere, not a lot anywhere. Which brings us to the country everyone points to, China. And to be fair, China has actually been building real infrastructure here, not just talking. Its cross-border payment system, CIPS, had grown to 176 direct participants and nearly 1,500 indirect ones across 119 countries by September 2025. The People's Bank of China has currency swap lines with more than 40 central banks. Russia and China now settle over 99% of their bilateral trade in rubles and yuan, cutting the dollar out entirely. So why is the yuan's actual share of global reserves still stuck under 2% on an economy that's roughly 17 to 18% of the world's GDP? Because building pipes isn't the same as building trust. To really hold yuan as a reserve, a central bank needs to convert it freely, move it in and out without permission slips, and trust the legal system if something goes wrong. China's capital account is still tightly controlled. The exchange rate still trades in a band the PBOC manages, not a free float. It's less a locked door and more a revolving one. Money can walk in through trade easily enough, but walking back out with your savings intact requires the government's blessing every single time. Nobody wants a reserve currency with a permission slip attached. And here's where the headlines get ahead of the reality. At their Rio de Janeiro summit in July 2025, the BRICS bloc released a 126-point declaration. De-dollarization wasn't mentioned once. Brazil's own president, one of the loudest voices for a shared BRICS currency a year earlier, quietly dropped it from the agenda. Vladimir Putin himself said in late 2024 that Russia isn't trying to abandon the dollar. And when the idea of an alternative currency resurfaced in early 2025, the US threatened a flat 100% tariff on any BRICS country that pursued it. And countries like Indonesia immediately said, thanks, but no thanks. The BRICS currency has been coming soon for 4 summits running. So here's why any of this actually matters to you. Sitting there with a mortgage or a car payment or a grocery bill. This isn't a collapse story. Nothing here suggests the dollar falls off a cliff next Tuesday. It's an erosion story. And erosion is slower and honestly scarier because you don't get a headline to react to. If that 56.77% keeps drifting down over the next couple of decades, 3 things happen to you specifically. 1, borrowing gets more expensive across the board, not just for the government. Mortgages, auto loans, credit cards, all of it is priced off the same treasury yields that get worse when reserve demand weakens. 2, imports get pricier because a chunk of the dollar's strength is that structural demand for it. And if that demand thins out, so does your purchasing power at the pump and the grocery store. 3, the freeze arrivals money trick gets harder to pull off, which matters more than it sounds because that leverage is a foreign policy tool used far more often than most people realize. That 56.77% isn't a spreadsheet stat for economists, it's a dial connected to your interest rate. So what do you actually do with this? 3 options, and think of it like a relay race because that's basically what a reserve currency handoff looks like. Option 1 is the panic sprint. You watch a headline, decide the baton's about to get dropped, and dive for the exchange zone early, dumping dollars, loading up on gold or crypto or whatever's trending, certain the handoff is happening right now. Historically, that's a runner who lunges too soon and fumbles the pass. Option 2 is standing still. You assume this handoff never comes, the dollar's invincible forever, so why even watch? That's the runner jogging along, not even glancing back for the baton, assuming it'll just land in their hand no matter what they do. Option 3 is the one that actually wins relays, and it's boring on purpose. You don't change your race. You keep a little diversification, you watch the data instead of the headlines, and you let your financial plan stay unglamorous. The runners who win aren't the ones lunging or the ones jogging blind. They're the ones who have been quietly adjusting their stride the entire race so the exchange, when it comes, barely looks like a moment at all. This isn't a lock to pick or a gauge to check, it's a pace to hold. Empires don't lose reserve currency status in a headline. They lose it 1 decimal point at a time.